Futures Radio Show, sponsored by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world effectively manage risk. For access to free educational tools and resources for the active individual trader, please visit activetrader.cmegroup.com.
Every day, traders and investors dive in to tackle the ever-changing markets to find opportunity. Futures Radio Show is your number one source for answers to the questions that all market participants want to ask. Veteran futures trader Anthony Crudele sits down with the most influential leaders and top traders in the industry. Now, here's your host, Anthony Crudele.
Hey everyone, thanks for tuning in for this episode with Bryan Shannon. Remember, new shows are posted every Monday and Thursday. You can subscribe to our show on iTunes and YouTube. Now, if you're enjoying the show, please leave a review on iTunes. Before I play today's interview for you, I want to give a shout out to the great sponsors of Futures Radio Show: CME Group, Trading Technologies, RJO Futures, and Top Step Trader. To learn more about these sponsors and the important things they are doing for futures traders, be sure to click on their logos on our website. Now, today I spoke with Bryan Shannon. He's the founder of Alphatrends. Bryan's a swing trader, so we focused a lot of today's show on his process for swing trading. He shares with us how he got into trading and why he chose to be a swing trader over a day trader. Bryan tells us his process for entering and exiting trades, shares with us his technical analysis strategy, and explains how he uses an anchored VWAP. Finally, we talked about why he has guidelines instead of rules for his trading. Without further ado, let me take you right to that interview with Bryan. Bryan, how you doing?
Anthony, I'm doing well. Been looking forward to talking to you for a while here.
I've been looking forward to this too, Bryan. Great to have you on the show here with me today. A lot to talk about. But first off, what I want to do is learn a little bit more about you. I know a little bit about you and your background, but how'd you get started in this crazy industry?
Crazy trading industry began for me, actually, when I was a young kid. I saw that people were talking about silver. My dad used to watch Wall Street Week every single Friday night, and I would sit there with him, and I wasn't really watching it, but I would pick up stuff, and they were talking about silver a lot. And I said, "Hey, Dad, was that something we could buy?" So he bought 100 ounces in my name at about $7 an ounce. And that was before the bunkers came in and, pushed up to 50 in that. I mean, this was really early. This was early 80s, late 70s. I've forgotten by now. But after that, I had a first trade in a stock called LoJack, where the stock went from 5 to 10. And I had 1,000 shares, and I was 16 years old and thought I had it all figured out. So after that, I said, well, I obviously want to become a stockbroker. I didn't realize a stockbroker was a glorified telemarketing position. So I didn't do that for a lot of time. I realized I really wanted to be a trader. I like to kid around. I don't mean to be cavalier about it, but I did get to practice with other people's money and understand, gain a better understanding of the market before I did go trade at Acme. I'm kidding. It's not Acme. Generic trading. Might as well be though, right? So generic trading was a prop firm. The way that some of them are done now, where you put up a deposit basically to insure against your losses, and they'll give you up to 20 times trading, capital intraday. So I scraped together $25,000 and traded with generic over a modem. This was 24 to 48K was a big thing when it went to that. And I did well at it. I did well with generic, and then that's when I went and opened the day trading office. That lasted for a few years before I kind of joined forces with a competitor in the Denver area, David Nasser, who had a firm named MarketWise. We joined forces. That kind of played out about 13 years ago, and I've been doing my own thing since then.
So you got your hooks into the market because of silver. Have you traded that beast since?
I have not. I wanted to get bullish on gold last year, but it never broke what I think it was 1360. But no, I really never have. I've just been an equities guy for the most part, and I trade options on some of these equities when I think there might be an unknown or some kind of risk that I don't want to have the larger exposure with the stock. So I'm a directional optional player, in other words, and I sprinkle a little futures in as well.
All right, Bryan, let's dive into your process here a bit. Now, you've been around a long time, so I'm very curious to see how you go about your trading business. And one thing I know about you is that you are a swing trader. So I want to start there. Why did you choose to be a swing trader instead of being a day trader?
Good question. And I've changed over the years, meaning that, coming from a brokerage background, there wasn't swing trading. It was, you'd buy stuff and, maybe hold it for 6 months, 3 months if you're, had a good winter and wanted to take some off. So I gravitated towards holding for a few days. I thought that was my sweet spot early on. And it really, truly was. That was what allowed me to be successful from the start. I think the more decisions that you make, the more likely it is that emotion's going to creep into your process and you're going to make the bad decisions. You're not able to slow down. I can be influenced by a news headline, so I know that's a weakness of mine. I won't leave the TV on CNBC because they might say something and I'll look at it and I'll do what I call a junkie trade, and then I'll regret it every time. I'm not a news trader, in other words. So I like to look for the swing trades now because I've asked myself previously, am I getting older? Here I am 50 years old and I just don't have the patience or the stamina to sit there and watch tick by tick. But it's just my personality has changed in that I can slow things down and go for the bigger picture. I've been super annoyed in the past as well at how much commission I've paid over the years, and looked at that and said, you didn't have to do all that busy work with all these day trades when I'm good at identifying the swing trades. And the key is, if it's not a good swing trade, it's generally going to let me know the first day, because my special skill set, I think, is to find pretty much the right moment when the market moves. So I'll get in with a little bit bigger size than what most people would say is the right way to do it. But I do take some off very quickly, that first day. So there is a day trading aspect to what I do, but it's not the goal, if that makes sense. And then I'll raise my stops, or it'll hit a target. I'll peel a little bit off, but I want to always, I mean, even over the years, I've thought in the past, well, why even bother holding 100 shares of that stock? But if it's still working, and I've thought it's gone up way further than it should, and it keeps going, and I look down, I'm like, that was an extra $900 because the stock had a crazy move, and why wouldn't I want that $900 on that last 100 shares?
Hearing you explain why you chose to be a swing trader instead of a day trader tells me that it fits your personality better. I think this is so important for everybody out there listening. I don't believe you can choose the type of trader you want to be. You can't say, I want to be a scalper. I want to be, a day trader. I want to be a swing trader. I want to trade stocks. I want to trade futures. I think that you have to do some homework and do some diligence to find out what fits your personality best. I've tried to trade other things, but for me, it's always been day trading futures is what fits me and my personality best. Do you feel that swing trading picked you instead of you picking to be a swing trader?
I do. And, I used to be, though, again, I had a difficult transition period for a while where I was doing really well with day trading. And then the HFT thing years back kind of confused me, and I wasn't getting the results I wanted, and I was, very frustrated. And I decided then I was going to try to hold things longer. And when you're trying to transition your time frame at least for me, it was very difficult because I would tell myself, why didn't you take that quick profit? Now you're selling it at break even when I knew I should have taken it. And so it confused me in that way. It was a difficult transition, but it's definitely kind of what my roots have been. And I think that, a hot market it's never easy, but an easier period for day trading that for me doesn't exist anymore helped the market tell me that I should be a swing trader and focus on that.
Yeah, I mean, because people change, markets change, and we have to adapt and be willing to adapt. I, like you, I went through a change too, and you and I have talked about this in a different conversation. I was trading every second, it felt like, as a scalper for many years, well over a decade, to where now I really only pick one direction a day in the markets that I'm trading. And I'll trade around a core position, but I am most of the time sitting on a position intraday, and sometimes I'm trading around it, sometimes I'm just holding it, but that is different from where I was. And because I personally changed, I mean, let's face it, Bryan, we get older. we
Right.
don't sit there and we want to be clicking all day long. I know that for me, I probably would still be doing it if I felt that was better for me and the market was telling me that's what I should be doing. But I've learned from the feedback of the market that the more I clicked, I wasn't making more like before. So I adjusted too. And I think kudos to you for being able to adapt and change. And I want to talk a little bit more about your process. I know you like the anchored VWAP, and because you are also a swing trader, I'm wondering, do you use any fundamentals? And just going back to the anchored VWAP, do you use any other technicals in your strategy?
Okay, let me back into some of those, and I'll just give you kind of my general approach each day. Each day I'll go through a list that I've culled over the weekend. So each weekend it starts basically, I go through what I call my master list of stocks, which is about 700 right now. There are all kinds of names, little crazy ones that move, the little junky trades to, all the FANGs and in a lot of ETFs. And I'll look at that list and I'll on the weekend generally, I think I have 5 different time frames. I go through them very quickly, so all the 5 time frames populate at once. And I'll go through that list and get it down to the list of stocks I want to look at that week. And it's going to sound like a lot, but I'll have that list to about 200, 250. So each day I look at that 250 and I say, which ones look like they have the potential to do something in the next couple days? And I put a check mark to the ones that I think are most likely for the next day. And I'll just have the other ones on my screen just because I want to see how they start to set up. And I call it either my watch list versus my focus list. And what I'm looking for there is a stock that's in a trend, whether it's an uptrend or downtrend. I'm not looking for longs and I'm not looking for shorts. I'm looking for opportunity. And I think that's something that a lot of people don't understand when they do a scan. There's nothing wrong with scans because they can help you become a lot more efficient. But I can get through that list of 250 in an hour looking at them manually. And the market's telling me what to do rather than saying, okay, market, here's my shopping list. I want you to fill this for me because these are going to be the good ideas for tomorrow. It's a start, but it's not, you pick up on subtle nuances looking at the individual names. So what I'm generally looking for, though, is let's just talk about the long side because people understand that better and we're in a bull market. So I'm looking for a stock that's in an uptrend, let's say on a daily time frame. And a real quick thing to look at, it's not the most important thing, is what's the direction of the 50-day moving average? If the 50-day moving average is rising, I generally look at it and say it's innocent until proven guilty. So that'll say, okay, now I'm interested in this stock. I'll look to a 30-minute time frame, and I'll say, okay, it's pulling back. It's pulled back for the last 4 days, and it seems to be finding support in here. And this is, the 38.2% retracement of the most recent move, or it's still, I look for a flat to advancing 5-day moving average on an intraday period. That's been a super helpful tool for me to when to get into a swing trade from that perspective. And then I look to the shorter term timeframes to really see who's gaining control. As far as fundamentals, you want to be aware, I think, of the two most important things is the company selling more stuff, whatever it is, widgets, going back to Acme, the Acme products. Are they selling more stuff, and are they making more money doing it? So for that, I use the MarketSmith tool from Investors Business Daily. Their charts allow you to get a quick snapshot of what those fundamentals are. And then I just want to be aware of potential catalysts. Is there something that's going to jam me up in this stock? Like today, I liked Sonos the way it's setting up after its recent IPO, but they reported earnings after the close. And then so I wouldn't take a swing trade in that because I knew there was a potential catalyst. And sure enough, the stock's down 12% after the close. So I hope I didn't ramble there and I painted the right picture.
Yeah, all good. One question I have for you is you mentioned anchored VWAP. What is your process for choosing where you're going to anchor for the VWAP?
Well, I think that, most people look at the VWAP and say, okay, from today, so from the very beginning of today's session, that's where it's traditionally looked at from. So, but you can, so the anchored VWAP, what it allows you to do, rather than looking at a 20-day moving average or a 50-day moving average, although I still do that, it allows me to say, to me, it's a sentiment indicator. Sentiment is a nebulous concept. How do you actually measure who's in control of the market? So if I say anchored from, so for instance, the election, after Trump was elected, people say, well, this is going to peter out. The rally's over after a few days because it pulled back one day. But if you put a volume weighted average price that calculated from that point forward, as long as we were still above that volume weighted average price, it said since the election, the average participant is making money. So you cannot say the rally is over if the average participant is making money from that point. So it's the anchoring bias that I'm sure you're familiar with, Daniel Kahneman's work, that what is, people will say the most important price of the day is the closing price. Well, if you're an intraday trader, what do you do with the closing price? There's no liquidity there, it's closed. The most important price, I think, is where is it in relation to what I paid for it? We're anchored to that price. Institutions are anchored to their performance year to date. That's how they're going to get their bonus. That's how they're going to measure their performance. Are they outperforming the S&P year to date? Since an earnings report, or just last week, and I posted a chart on Twitter today about this, about Nike. It dropped down after their Kaepernick thing, and the stock gapped down. And I mean, it hit, Anthony, perfectly the volume weighted average price from the last earnings report when it gapped up. And then it's had a 8% bounce from that level, almost to the penny. I mean, it's amazing. It's what I consider to be a perfect combination of price, volume, and time. And time for you or for me or other participants has a different meaning. I don't care about what the stock's going to do in the next 2 years if I'm a swing trader, and you don't care about the next 2 weeks if you're a day trader. So it's time specific to match with certain events, earnings reports, stock splits, FDA announcements, you name it, a secondary offering. Who has control from that point where there was a shock, something that caused the market to move dramatically? From a gap, for whatever the reason is, it allows you to objectively measure who has control from that point forward.
Gotcha. So what I'm hearing is a lot of what you're doing is discretionary. Your anchoring is discretionary, but you are looking at the 50-day moving average. Then you said you looked at the 30-minute time frame, and then you're using some fibs. And then you said that you went to even shorter time frames. I'm just curious, do you ever even go below a 30-minute chart?
I do, yeah. If I'm looking at a stock for a swing trade, for instance, last week Ulta had earnings. It had a big day. Then it pulled back intraday. So I was looking at a 5-minute time frame to say, here's where I think it has the ability to follow through tomorrow morning. And I will look at even a 1-minute chart if I have a stock that gaps up on me, it rallies for a little bit, pulls back, but then gets back above that volume weighted average price. I'm looking at the stock as a swing trade, but I have to think, okay, it had a gap here. How do I measure my risk from this point? So, once it gets back above that volume weighted average price for that session, then I say it's worth taking a position here. Maybe my stop goes below the low of the day, and try to participate in what might be a larger time frame breakout. So it's a blending of all the different different tools that you just mentioned. And the main things, though, you've probably seen, I say all the time, only price pays. Price is how you measure, right? It's how you keep score. So that's what gets the most weighting from me. And then it's just trying to get those time frames to align to say, now the momentum looks like it's ready to move in the other direction. So I don't buy pullbacks, in other words. I don't want to buy blindly into an abyss. Occasionally I'll break that rule, but if there's just a big reaction, that is. But I have guidelines. I don't have rules. I have guidelines that say generally I want to trade for swing trades in the direction of the 5-day moving average. It has to be flat to turning higher for me to consider it a swing trade. For a day trade, or for an entry, if the stock gapped up and it stays below the volume weighted average price from that day, I don't want to be involved in it, because it tells me the average participant who bought it early is losing money, and the average participant for the day is losing money. This is viewed as an opportunity to take profits by someone out there. We don't know who or why, but I'm not going to fight them on it.
Gotcha. So a couple things. I want to get into execution here in just a moment, but just so I'm clear, to me, it sounds like the 50-day moving average is a big part of what you're looking at, because you're basically looking to be long if it's above it, and then you're using, your 30-minute time frame, some fibs and other discretionary tools like we talked about, your anchored VWAP, to then look to see within those markets that you're looking at if there is opportunity. Am I correct on that?
Yeah, so the way I like to describe it is you take the bigger time frame to say, here's what the idea is. Here's the general concept. 50-day moving average is rising, the stock's showing higher highs and higher lows. It's not a stock I want to be short. So then I'll look to a shorter term time frame, the 30-minute, and that's where I plan my trade and say, what's the potential risk reward here based on how far away are we from what could be a potential target versus where do I call it quits if it breaks down from here. So that's where I establish the risk reward. And then I'll go down to shorter term timeframes just to get my timing as precise as I can.
Okay, now let's talk a little bit about execution then. You've already given us a little bit of a rundown of how it looks like, but if you could take us through an example, because when I hear you talk about a lot of what you're looking at, it's very discretionary for me. So I'm trying to envision how you go about picking one of these markets to trade and then actually going in and executing it. So either give us a recent example of something that you did, or just, a hypothetical example of how you would use the charts and the tools that you've talked about to get into the trade. We'll talk about exits after that.
Sure. I already mentioned Ulta, so let's talk about that one. On the last day of August, they reported earnings. The stock was up big, and then it pulled back intraday. It held above its VWAP for that day, so it went onto my radar because it was making a significant breakout on a bigger time frame. The next morning, I looked at it. It gapped down a little bit, and then it took out an afternoon, the high from the previous afternoon, and that's the level that I had targeted, above $263. So as it went above $263, I bought, and it ramped up really quickly from there. It hit daily R2, which was 11 points higher. So, we're talking about a $260 stock here. Some people get excited because they hear 11 points. It's all relative, of course. But I took a third off at daily R2, and it continued higher, and I didn't care. That was fine. But then I set my stop on the 2/3 balance to just about break even. There were no it would have been damaging for it to get down there and I didn't think it would. So a couple days it went sideways, and then it ramped again. And then last Friday, I took another third off at I forgot the number. I don't have it in front of me. It was about 287-ish. And I have a final third. And on that final third position, my stop right now is down at 274 and change. So I've got an 12-point cushion, really, for it to come down. And I don't think it's going to, but that, it's a wide stop, 12 points, but this stock might go 30 points. It might go 40 points. We just don't know. So I'm going to try to milk the last third as long as the market tells me to, realizing that I'm not going to get out at the top.
Okay, a few things more I want to talk about entry. When you get in, are you predetermining your stop? And also, how are you getting your targets? So I'm curious to see if your targets come first and then you're choosing a stop accordingly, or if the stop comes first and then you're kind of figuring out your targets from there. And are you ever scaling in? Because as a swing trader, for me, always as a day trader, I do both. Like I said, I swing trade cryptos. So as a day trader, I'm always scaling in, and for the most part, scaling out. I mean, there's no such thing as always, but a majority of the time. And swing trading is the same thing for me. When I'm getting in cryptos, and I was just telling you, I said, I'm looking to start nibbling on some Ethereum here soon. I don't get in all at once, especially cryptos, because I feel like, they might run me over right away. I want to see how it reacts at my areas. So I'm curious if you do that as well.
I agree on the cryptos that you can't get in all at once there. And that's, when I trade them, that's how I do it as well. So I consider that just a completely different beast than equities. And with equities, generally, I establish my full position right away. And I don't necessarily have a target. In fact, if you go to Alphatrends and look at the frequently asked questions, it says, why don't you have targets, or why don't you generally have a target? And I have an idea. You have to base your risk reward on something. It's theoretical though, right? I mean, it's garbage in, garbage out. We can adhere to our stop, but a price target means nothing. I might use a measured move. I'm sure you know what that is, but the height of a recent move, compared to where it pulled back to, and add to that pullback to get that objective. But my thought process is, if I'm right, the market will let me know, and I'll be able to take that first third off generally pretty quickly. At the daily R2 on the first day I get it and it's not because, let's say it's a $30 stock. It's not because I want to make 40 cents or 35 cents, but it puts me in the position where I've gotten involved all at once to begin with, and it allows me to control risk a little bit better. It says now I've essentially lowered my cost basis on the balance, and my stop is generally not adjusted for a day or two unless it really gets a big move, but it gives me that cushion. So the question is, do I get in all? Do I ever scale in? Very seldomly do I scale in. If I am uncertain about the stock, or if there's a little less confidence because maybe the market's been down a few days in a row and I like this one stock long, I can't tell you how many times I've missed a great long trade because the market was pulling back, and I've told myself I can't do that. So instead I trade them with smaller size. I'll just adjust my I'll use the same stop, but to compensate for external risk factors, I'll just reduce the amount of shares, so I have less dollars at risk each time.
Gotcha. Now I know you're trading futures and options too. Is that same format carried over into those products?
Yeah, with options it is definitely. Options is for me a way to say, similar to adjusting my share size. If I'm adjusting my share size, the problem with that is it's generally not one of the most liquid names. It might trade 1 million shares a day, and the options in there are going to be $2 by $2.40, and it's real difficult to get in, to get liquidity somewhere reasonable in between. So I'll look at a stock and say, I don't want to risk a lot of money in this stock, but I want to buy options instead, and I know exactly what my risk is. So I'll look at them as a swing trade, but maybe even generally hold a little bit longer because I think it might be a little more volatile, and I know what my risk is. With futures, here's where I'm going to contradict myself a little bit, and I don't talk a lot about my futures trading because it's generally mostly day trading and actually scalping as well. So I look at the futures as a different instrument. I don't think I've ever held a futures contract overnight. Those are generally, pull back to the volume weighted average price, let it settle in there a little bit, establish, 2 to 5 minutes of support at that VWAP, and then buy it as it's breaking away with a stop just underneath that pullback low. And then if I have, a few contracts, I peel a little bit off on that first quick move and try to, look at the 1 minute bars and say it's making higher highs and higher lows. The pullbacks are shallower than the rallies, so I'm going to continue to hold, and I might hold them for 2-3 hours type of thing.
Thanks for sharing that with us. So you basically answered my question on exits, but something that you mentioned a little bit earlier, I want to go back to, and I believe you said, and correct me if I'm wrong, you don't have rules, you have guidelines. Is that correct?
That is, yeah.
Okay. So this is interesting to me because I've written a post on this saying that I have instincts, not rules. So I'm just curious to see if we have similar thinking this way. So talk to me about why you have guidelines, not rules.
Well, I think that, people look at it as an if then, and you have to come up with a risk reward, but you have to have flexibility in the market. There's too much unexpected movement that no one can accurately predict the market. We anticipate different scenarios and manage risk and determine if the risk reward makes sense. One thing that people say is, hey, the market's at resistance. Well, wait a minute. Or, we don't know resistance until after the fact. It's a level of interest where it might show resistance here, but until the prices turn back lower from that point, you can't say it's resistance because it might consolidate through time there, or it might just continue to blast higher. So the hard and fast rules are really when it comes down to risk management, that if it just starts moving against me beyond my stop, then that's hard and fast. But as far as price targets, that's why I don't like to have price targets so much. Is it's up to the market to tell me, and as long as the time frame I'm trading on continues to show a pattern of higher highs and higher lows, I still want to hold that last third. I've satisfied my urge to get out of some a little bit with that first third, realizing that I'm not there to make a lot of money on that. The second third should be a pretty good profit generally, and then the last third might be, turn into a home run that I hold 3-4 weeks and just surprises the hell out of me how much you can make with some of those moves sometimes.
Yeah, Bryan, I got to tell you, it's refreshing hearing the discretionary trader still alive, because I'm one of these guys like you. I mean, my strategy itself is definitely more systematic than yours is, but my execution is discretionary. I use the skills that I've learned over the years. It's like, why be in a business for years if I'm not going to use what I've learned to help me execute my strategy? So really great stuff, Bryan, and thank you for sharing it, but we're not done yet. I have some rapid fire questions if you're ready for those.
Okay, let's go.
All right, everybody. Our rapid fire segment is sponsored by Trading Technologies. Access the global markets from virtually anywhere with TT. They are the world's fastest commercially available futures trading platform. And now you can trade cryptocurrency spot and derivative markets side by side. For more information, please visit tradingtechnologies.com. Bryan, first question for you. What trader has influenced your life the most and why?
I would say Mike Collins at Lehman Brothers. He was a broker that I worked for, and he used to get the daily graphs and do earnings surprises and really showed me how to marry fundamentals and technicals.
What was one of the hardest things that you've had to overcome in trading?
Well, self-based, meaning repeating mistakes. I used to try to be the guy who could pick the bottom, and then I would stubbornly hold on and add. And those who, without a doubt, have been the biggest losers in my career, is being stubborn and fighting a trend. And it's why I'm so adamant about sticking to a trend. So being stubborn basically has been the hardest thing to overcome.
How has your trading process evolved over the years?
Well, I think we kind of covered that in that I started out mainly as a swing trader, and then, evolved to a day trader, and then I'm back to kind of what I really consider for me the sweet spot in the market, which is swing trading.
What is one attribute that you believe every trader should have?
We kind of discussed this a little bit, I guess, as well, is being flexible. Stop believing the market cares what you think and that your plan is the only way the market is going to go. So be flexible with new information. The market's dynamic. It's a living, breathing organism that gives you new data to analyze on the spot. And if you're not experienced enough to know how to analyze that in real time, then expand your time frame out.
Favorite book about trading or the markets?
This has got to be a setup. Technical analysis using multiple time frames. But Stan Weinstein's book. Stan had a huge impact on the way I look at the market. So I would say Stan's book, Secrets for Profiting in Bull and Bear Markets.
Favorite movie or TV show about trading or the markets?
I was going to say Rounders as the movie, but I was thinking that the television program Billions, I see people trashing it. I don't get it because I like the way that they really show some things that are, I think, happening. So, for instance, the last season with the beverage where they put the bug in it to make people sick, and it sounds a lot like Chipotle. How they use satellites to look at plants that are supposed to be, building this many widgets, and instead they're completely abandoned. So I think it shows a lot of insight that people aren't getting.
What's the best piece of advice that you've received about trading or the markets?
David Nasser told me, never love something that won't love you back. And the market will not love you back. It is unrequited love if you love your stock or your position.
If you could give a piece of advice to the younger you, what would it be?
Be more patient.
Last question for today. Favorite thing to do when you're not trading?
Just being outside. I'm in Colorado. We've got great hiking. We go canyoneering, skiing, biking, just being healthy and being outside.
Where can people find you on Twitter, and give us a website to check out?
Twitter is at Alphatrends, ALPHATRENDS, and the website is alphatrends.net.
Bryan, this was awesome. Thank you so much for coming on Futures Radio Show today.
Thank you, Anthony. I enjoyed it.
Thank you for listening to Futures Radio Show. If you have any questions or comments for myself or my guests, please visit futuresradioshow.com and sign up to be a premium member for free. If you enjoyed the show, don't forget to leave us a review on iTunes.